So John, the Kohl's customer is largely a low to middle income consumer. And so I just went there yesterday just to see what the store looked like. And I did observe that their customers are definitely seeking value. You don't always see a lot of bags because they're in there carefully choosing, trying to find value. And so this is why the company has brought on deal bars. Those are $10 and under items. And now they've announced that they're also bringing in toy bars. So they want to also feature items, again, $10 and under, with different price points of like $4.99, $5.99, et cetera. So they're really trying to gain, traffic and conversion, but really they're also leaning into their private brands. So for example, I did observe that LC Lauren Conrad, which is their women's label, it's a fun label, and they did a great presentation in the store yesterday. The problem is that the rest of the store is still it's not really cohesive. So we're really not there in terms of where we need to be, where you can see a real cohesive strategy. And so we saw a lot of clearance in the stores as well. So they still have a road ahead, as you highlighted, with the 4 years of stacked comparable sales declines.
Yeah, that's quite a track record to have to turn around. Mary, according to a company presentation at the earnings, Kohl's admitted that it lost competitive ground during high traffic shopping windows, including Black Friday, Cyber Monday, and the week following Christmas. When I read that, I thought that was a fairly startling admission. How do you interpret that?
I wasn't surprised, candidly, because we were there on Black Friday, and I could see that shoppers were trying to spend, because you get sort of a free, the minute you walk in the door, you get a free Kohl's cash, and you scratch it to figure out how much cash you get. And trying to find a way to spend it was a challenge because there were a number of excluded items. And while they've increased the number of brands that are not excluded, there's still a fair amount. So there was some confusion, and not a lot of customers were walking out with bags, is what we observed. So we felt like, it was hard pressed, let's say, to find a way to spend the money. So they really needed to do a better job, and that's what they admitted, on finding values. And that's why they say that their margins this year, are going to be hard pressed because they need to get the sales lift, right? They've done such a great job on managing expenses, and they'll continue to do so. But until they get the sales moving in the right direction, they're not really going to see that margin improve, because they do have to be more promotional, have sharper values. And so that's going to impact margin to a certain extent. But it's important so that they can be competitive, because we saw strong results in off-price, as you note.
You could hear me early this morning going, ouch, as I filled up the car. It was, what did I say, $3.60 a gallon. Did that come up in the call with the executives?
Oh, good question.
It's probably the last thing they need for their customers to be paying lots more for other stuff.
John, you're absolutely right. And this customer is really going paycheck to paycheck. And so when you do have gas prices going up, that's going to impact their discretionary income, and thus the importance that they really have those sharp values in the stores. So that's what they're hoping to achieve. They're really leaning into their private brands, and they've got a campaign by Kohl's, which features their brands like So for Juniors, and that actually did well because they really featured that heavily in the stores. We observed it yesterday. And so, I think, and that also helps on the margin side to a certain extent. But again, they really need overall sales to rise to really get margins to move in the right direction.
This is a company, as you pointed out, has been struggling for about 4 years with same-store sales, not performing very well. You just look at the sales growth over the last couple of years, and it's a bunch of negative numbers starting from 2023 on. What is needed here to really change the trajectory of Kohl's? How much longer can it go in this same direction before it becomes a candidate for takeover by another company or by private equity? Or, something needs to change, perhaps.
Scarlett, yeah, you raise a valid point, because when you think about it, they do have a juicy real estate portfolio, so that might be attractive to some strategic buyers potentially. So there could be some interest here. We also think that with over 1,100 stores, do they really need to be operating that many stores? They did say on the call that they have no plans to close or open any stores, really. They might have a replacement store here or there, but their objective is really to get this box more productive and also raise digital sales. They really want to take advantage and grow digital sales too. So it's really about reaching a point of stability on the top line. And so they're, like I said, leaning into private brands, and they have a number of initiatives, but it's going to take time. So they're already guiding toward comparable sales declines of about 1% to 3% in the first quarter. And when you look at the stacked 4-year comp decline they're going against or cycling, that's a 17% decline. So that shows you the magnitude of the decline, and that's even after gaining a $2 billion revenue business with Sephora. So that means that when you look at the declines in the rest of the business, it's much steeper than the 17%. And so that's a critical thing to note. And when you think about Sephora, their comp sales were flat in the quarter.
Yeah.
Previously, we were seeing increases. So that business has really matured at this point. And that's why they've got a number of initiatives there, bringing in more brands
Right.
to really ignite and try to grow that business.